Okay, Mark, our famous monetary policy checklist board.
Everyone talks about it.
And I love it too because it explains it so easily. Okay, GDP. So where's the economy? It's really weak. We'd be easing. We get the September quarter numbers next week. They'll show GDP about 1.3% in annual terms, too weak.
And bear in mind, what would the government like to see?
Government would love to see 2.5 to 2 3/4, maybe 3%.
What are their budget? What's the budget assumption?
The budget assumptions are between 2.5 and 2.75.
Yeah, right.
And we're at 1.3, 1.4.
Yeah.
It's really weak.
Yeah, totally.
If that was the only thing, they'd be cutting. Inflation. Putting that there still. No, they're not going to hike. I'll put it in neutral because they're not going to hike. They're not going to cut. It's as we've had that long discussion. Labour market.
Now we're talking about unemployment here.
Unemployment's 4.1.
Still hasn't budged.
It hasn't budged, Mark. Like this weakness in the economy. If I've got 30 seconds, I've heard this discussion from people who are smarter than me talking about it. The change in our labour market in the last 5 to 10 years means that we're not getting that increase in unemployment because if you lose your job at a retailer or something, you go home, you think, bugger, I've lost my job. I still need to get some cash. Oh, I'm going to drive my car and become an Uber driver.
Yeah.
So you're going to get some money, maybe not what you're earning before, but you're going to keep your head above water financially. And so the jobs numbers look good, even though people are hurting financially.
Because they're not registered for unemployment.
Correct. If you're driving an Uber, you're not unemployed. No. Or other things like that. So that flexibility, and you look at the number of new ABNs, Australian business numbers that have been created from the tax office, bloody huge.
And which is what Uber guys have to do.
What you've got to do, you've got to get an ABN. You've got to set up yourself as a company.
That's interesting.
So it's really interesting. So the company increases, maybe. We don't know yet. We need to see a bit more research, but maybe that's the labour market. Wages. Now, that's one that's moved from last time. The wage numbers came out 2 weeks ago, 3.5% for annual wages growth. That's the Goldilocks. Not too hot, not too cold, just right. That's a really good result. International economy, I'm putting in easing. Rate cuts, New Zealand, China, we mentioned the world economy, really weak, still is. So if we're part of the world economy, that's rate cuts. House prices, they're starting to soften. We haven't really had a good chat about house prices recently, but Sydney's now down a smidge, like 0.1, 0.2.
But it's not growing either.
No, it's not growing. And on a $1.5 million house, 1%, who cares? It doesn't matter, but it's gone up so much. So I'm leaving housing in neutral. It's sort of, they're not worried about it because of house price inflation, nor are they worried about the effect on the banks of a house price crash.
Yep.
They just let it go through to the keeper. Retail sales. That's moved from the easing to the slightly less easing. September quarter retail sales, while they weren't booming, they were a little bit better. The income tax cuts, which most people got on the 1st of July, these subsidies, the $75 I'm saving on electricity, did go into retail spending. So still weak, but not as horrendous as it was. Same with consumer sentiment. My mates at Westpac, their consumer sentiment numbers gone up 14%.
Wow.
In the last 3 months. It's just under 100 now. The chart is absolutely fantastic. So we're not quite back to neutral, but it's gone up a long way. Again, maybe because stock market's at a record high, people got a bit more money in their pocket. Inflation's down, so that helps your cost of living. So that might be part of the reason.
Super's up.
Yep. Building approvals, keep that in easing. We need to build more housing. Even though building approvals have inched up the last little bit, they're still bloody weak. Business investment, we had CapEx numbers. Solid, neither good nor bad, again, so they're okay, so leave that one there. Business confidence, I'm tilting towards the easing side. The NAB survey of business confidence and business conditions tracking lower with the economy, so businesses are okay, but they're not strong. Commodities, dead neutral. Oil's really cheap. Iron ore's come off, but then you've got a lot of agricultural commodities going back up, so that's your inflation, that's your global inflation thing. So olive oil, orange juice, coffee. Those, which are really important commodities.
They're basics.
Yep. Stock market's at a record high. I wonder
Unbelievable.
if you tighten. I'll leave it in neutral. The RBA never mentions the stock market unless it's crashing.
But it does have an effect on the wealth effect.
Oh, it has a wealth effect, definitely. Yeah.
Especially for your superannuation account.
So everybody check your super balance. You're probably looking okay. And current rates are restrictive. So I'll move that to the easing side. So we're not talking rate hikes. We're either on hold or cutting at some stage. So there's still enough, and as we've mentioned before, up the top end of the board, they're the ones that have a higher weighting. They're way more important. And these three, which are neutral, are way more important than these ones that are sort of in the easing side. So inflation, labour market, they're the two red buttons that we have to move across to the easing side before we can sort of put our hand on the heart and say, hey, RBA, you got to start cutting.
And by the way, those two buttons there, the two red buttons in the neutral column.
Yep.
If we've just discussed this, we need to get the first one, which is inflation or CPI. We need to get that into have a 2 in front of it.
Yes, it has 2 point something, even if it's 2.9.
Yeah.
Trimmed.
Yep.
Measure.
Yeah, the trim mean or the trim measure or the underlying inflation number, however they refer to it. Then Kookie, you'll be putting on that red button over in the easing column.
Yeah, I would for sure, yes.
And
I was sort of hoping to on this monthly number when the headline figure was 2.1. I thought, oh God, what's
because it's so low.
What's the trim? I thought there must be some effect on the trim.
Yeah,
it must be like 3.1 or 3.2. Nah, the 3.5.
There must be, but those items that have just on this, and we'll finish off on this. But that's interesting you just raised because I did want to mention this to you. The last quarterly number was 2.7, I think.
2.7 for the annual figure.
Yeah,
yes, for the quarterly
headline.
Number, yep.
But the trim mean was 3.2.
Yes.
But this one's 2.1, but the trim mean's 3.5. So there must have been quite a lot of stuff they trimmed out with a lot of weight.
A lot of falling prices, the big falls, like not just falling 1%. And again, petrol, as we know, electricity, had a mental block there. Electricity subsidies were huge. They were trimmed out. And even things like clothing and things, they were probably trimmed out because they were the biggest fallers. And the things that went up, and we did mention a few of them like tobacco and education and healthcare and these things, insurance. They were only 5 or 6%, whereas petrol was minus 12, electricity was minus 30. So they trimmed out some really big ones. That skewed the trimmed mean higher in a mathematical sense. It's worth going to the ABS website, abs.gov.au, to the CPI, Consumer Price Index, and look at the methodology. How the hell do you get the trim number? I have to do that every other month because I forget what they do.
But is there a final question? Because we got some questions from some of our listeners that we're going to cover off. But final question for you from me. Do you ever get a feeling that there's a bit of a fiction associated with all this stuff, and that whilst we know cost of living is going up, but trim means and subsidies
services, inflation,
the weighting,
tradable, non-tradable.
Yeah, I mean, do you ever get to your point where you sort of say, "Well, is this a whole lot of crap?" And,
yes, I do. I do.
But it is the system. I don't get me wrong, and governments are going to make a decision based on the system.
Yep.
And the system and those decisions will affect how we live our lives.
I do get that frustration from time to time because the inflation rate is the most pure measure. What happened to electricity prices? What happened to bread? What happened to potatoes? What happened to petrol and tyres and insurance premiums and
mobile phones
books and newspapers and your health insurance as well as other insurance? What happened to these things? They measure those really accurately.
But they pick the basket of goods and services
based on household spending patterns.
Right.
They revise the weighting every year. It is now. So 20 years ago,
let's say we don't need bread anymore.
20 years ago, there were no mobile phones in the basket. They didn't exist. As they became popular, they went from a small weighting, maybe 0.5% to 1%. I don't know, can't remember what it is quite now, but so they're now part of the inflation rate. And things like horseshoes and horse and buggy, they might have been in the inflation rate all those years ago. Now it's cars.
Yeah,
and so they do change it with changes. And I think back in the old days, this is something I found really amazing. Back in the 60s or something, tobacco had a 5% weighting. People spent 5% of their household
everyone smoked
on bloody tobacco.
Because everybody smoked.
Yeah.
I remember it. Everybody smoked.
Everybody smoked, and a lot. Anyway, it's now a fraction of that. So it's now because so few people smoke. So the weights change and even the items that are in the basket change.
So it's fair to say, though, whilst it's arbitrary, it's not capricious.
Yeah, that's good. A good word.
So in other words, someone makes a decision on behalf of all of us, by the way.
Yep.
It's a group of economists in the ABS. They make the call.
Yes.
They definitely don't socialise it with us until after they made the decision. But it's not capricious because there is mathematics and logic associated with it.
And there's I can't remember the name, but there is a World Statistical Convention.
Yep.
So our labour force numbers are calculated the same as they are in the US and the UK.
Methodology-wise.
The methodology is the same.
Yeah, because
so otherwise you're comparing apples with oranges. Oh, US has got an unemployment rate of 4.3 and we're at 4.0. Oh, what's the difference? Oh, they calculate it differently.
Yeah, it's like our GDP.
Some countries calculate it a little bit differently, but we try to have the same methodology on inflation, GDP, labour market. So the Bureau of Statistics here, who have actually got a world-class reputation, they are really seen as one of the
highly
best
regarded
statistical agencies. They don't revise data much. They don't sort of make too many errors. Whereas other places, occasionally you see, like the US, they revise their employment numbers by 1 million people because they got the population estimates wrong. Okay. Right. That could be pretty important if you're the person setting interest rates based on these numbers. Oh, we're 1 million out. Oh, shit. So we have revisions, don't get me wrong, but they're nothing like that. And so they try to do a good job and they just try to get the numbers right. I've spoken to the ABS in the past on different issues. They just want to get the numbers right. They don't want to get an error in their numbers.
And I think we should be clear. They're independent of everybody.
Oh, yeah, it's independent of everybody.
Including the Reserve Bank. So,
yes. The Reserve Bank doesn't even know.
We all know at the same time.
At 11:30 when the inflation numbers come out, as I understand it, the RBA waits at 11:30 like all of us. Holy smokes, look at that number.
Yeah.
and react accordingly.